Hong Kong banks are witnessing long queues every day. A significant portion of this crowd consists of mainland Chinese tourists who are flocking to Hong Kong to open accounts and deposit money, especially since the deposit rates in Hong Kong are now 2-3 times what we have here. The Central Committee of the Chinese Communist Party has recently reduced interest rates multiple times, and the rates keep dropping daily. Meanwhile, the U.S. has raised its rates 11 times since 2022, since Hong Kong's interest rates are pegged to the Federal Reserve System. As we decrease, they increase, widening the gap. Hong Kong's deposit rate can now go up to 9%, while it's around 2% in China. Given this significant difference in interest rates, would you consider depositing your money in Hong Kong?
For the mainland Chinese people in Hong Kong recently, the real attraction isn't the duty-free shops or the food streets, but the entrance to various Hong Kong banks. Bank employees in Hong Kong have reported that every day in recent months they see a large influx of mainland Chinese customers rushing to open accounts. Media reports from 8 a.m. on September 7th showed long queues of mainland Chinese tourists outside the Bank of China in China Hong Kong City, even before business hours. Moreover, because banks in Hong Kong only distribute a limited amount of Q tokens, insurance brokers are seen queuing on behalf of mainland Chinese tourists.
I wonder what's going on with the Bank of China in Hong Kong. They don't give out Q tokens, and about 30 to 40 people just stand and wait, lining up for 4 to 5 hours. There aren't many people at the Bank of China wealth management counters on the left, but the 3 other counters on the right are packed. The counter on the left seems to be for VIPs and has about 8 to 10 people, while the right has 30 to 40.
Ms. Zhu from Xi'an, among the first 5 in the line, stated that she specifically came from the mainland to open an account. She arrived at the bank at 6:30 a.m., hoping to benefit from the high interest rates in Hong Kong and is planning to deposit 100,000 Hong Kong dollars. She mentioned that the China Hong Kong City branch is popular because it offers on-the-spot Q tokens. Quote, "It seems this bank only has slots for 40 people a day, so about 40 people queue daily," she said. She candidly shared that with China continually cutting interest rates and overseas rates rising, depositing money in China's banks feels like a loss. With the devaluation of the renminbi, it makes sense to convert to other currencies. She added that every Chinese citizen has a foreign exchange quota of $50,000 annually and can carry 20,000 renminbi in cash through customs. Quote, "Given the current unfavorable circumstances, you shouldn't just watch, you should act." Mr. Guo from Fujian, who came with his family to open an account, started queuing at 7:50 a.m. He mentioned that he frequently visits Hong Kong and, having bought an insurance policy here, opening an account would make future transactions easier. Guo also commented, quote, "Now that the mainland has just started easing its COVID-19 restrictions, doing business will likely be challenging this year. So we don't dare invest. It's better to keep the money in the bank." A Hong Kong drifter from mainland China who now works as an insurance broker in Hong Kong stated that she helps clients open a bank account after they sign an insurance policy, which makes future payments more convenient for them. She noted, quote, "Don't put all your eggs in one basket. Most people have this mindset now." Due to China's current unfavorable investment environment, many mainland Chinese clients are keen on buying insurance and other investment products in Hong Kong. As of July this year, her company's business volume exceeded pre-pandemic levels, surpassing the best times before the pandemic. To tap into this trend and cater to the hot topic, a plethora of tutorials on how to open a bank account in Hong Kong for mainland Chinese have emerged online.
Is it hard for mainland Chinese to open an account in Hong Kong? Today we are at HSBC in Hong Kong. Let's walk through the process. Opening an account with a Hong Kong identity card is relatively straightforward. If you use a China identity card, it's still doable, but you'll need some tricks. HSBC currently has no prerequisites for opening accounts. You don't need to pay management fees, maintain a minimum balance, or buy any wealth management or insurance products. However, using a China identity card might result in rejection because you aren't seen as a VIP client, and the account manager might be vague. Here are some key points to consider. Always book an appointment in advance, either online or by phone. Bring your passport, exit entry permit for traveling to and from Hong Kong and Macau, and proof of address. Many are confused with the proof of address, whether it should be a Hong Kong or a mainland China address. I've confirmed that a mainland China address works too. You can use your utility bills or credit card statements for this. When asked why you want to open an account, be prepared with a good reason. You can say it's for buying Hong Kong insurance, trading Hong Kong stocks, or you have personal transactions in Hong Kong. Many smaller banks won't probe too much, but if you encounter a particularly challenging one, just try a different bank.
From January to April this year, the number of new accounts by cross-border clients at the Bank of China, Hong Kong, increased five-fold year-on-year, which is 44% higher than the same period in 2019. From January to June, the number of new accounts in the Greater Bay Area's Standard Chartered Bank branch surpassed the total for 2022. HSBC data indicates that non-resident new accounts in the second quarter were double that of the same period in 2019. Meanwhile, data from Amy Kwan, head of business planning, customer segment, and ecosystem consumer banking group at DBS Hong Kong, which is a subsidiary of Singapore's DBS Bank, reveals that compared to pre-pandemic times, there's a 60% average monthly increase in new account openings this year. The insurance authority's data also showcased a 28-fold year-on-year increase in new life insurance policy sales to mainland Chinese tourists in the first quarter, with transaction amounts reaching 9.61 billion HK dollars. A spokesperson for OCBC Bank Hong Kong stated that nearly every bank in Hong Kong is witnessing a surge in new client data. In the first half of this year, the number of new accounts from mainland Chinese clients at OCBC Bank was 12 times that of the same period in 2022. As early as the beginning of the year, there were already instances of mainland Chinese tourists queuing outside Hong Kong banks to open accounts. It seems that the desire of mainland Chinese tourists to boost their savings in Hong Kong isn't a new phenomenon.
"无利不起早啊，为什么会这样呢？首先是利率的原因，在大陆的1年期美元定存基本利率是 1.5%， 指导之后可以上调到 1.75%， 但是在香港是 4.2%， 中间这利差我计算了一下，如果说存100万，那么每个月产生的利息差将是14000人民币。现在欧美那么多银行爆雷，所有的有风险的产品，大伙儿现在真的都很怕。那么把资金拿到香港是非常安全的。现在一点风险都没有的银行产品或者是金融产品，可能就只剩下定存或者是美元的保单了。不管现在是来香港开户、存定期还是买美元保单，都是非常的疯狂，真的是非常的恐怖。
At the beginning of the year, when interest rates on fixed deposits in Hong Kong were average, mainland Chinese tourists were already queuing up early at banks to open accounts. Now, with Hong Kong bank deposit rates soaring in tandem with the Federal Reserve System, the scenario of mainland Chinese lining up to open accounts has become even more intense. The frenzy of mainland Chinese flocking to Hong Kong to buy insurance and open bank accounts has become a focal point of discussion for major media outlets and experts. The most evident reason is to ensure financial security and garner higher interest returns. By purchasing insurance in Hong Kong and opening accounts there, mainland Chinese can transfer some of their assets, ensuring a degree of financial security. Due to economic stagnation in China, devaluation of the renminbi, multiple trust investments collapsing, and the spreading real estate crisis, more and more people from China are seeking ways to move their funds overseas. For many, buying insurance and opening bank accounts in Hong Kong has become a means to safeguard their assets. A young insurance broker from China who frequently travels between China and Hong Kong pointed out that after paying a certain amount for insurance or after a few years, insurance companies allow policyholders to use their policies as collateral to take out loans. This not only protects their assets, but also provides a new channel for liquidating them. Since insurance companies operating in Hong Kong are prohibited from selling in China, mainland Chinese must travel to Hong Kong to purchase policies. Before the pandemic, mainland Chinese clients already constituted a significant portion of Hong Kong's insurance business, making up about a third of Hong Kong's insurance market. As travel restrictions between China and Hong Kong eased, new premium contributions from Chinese tourists in the first half of the year surged to 31 billion HK dollars, equivalent to 4.1 billion US dollars, much higher than that before the outbreak in 2018 and 2019. This reveals the Chinese growing concerns about the opaque future development of China's economic engine. With the Federal Reserve System continuously raising interest rates, many Hong Kong banks have significantly increased their deposit rates since the second half of 2022. Some banks have one-year fixed deposit rates for HK dollars or US dollars reaching over 5%, with the general rate hovering around 4%. In contrast, after several rounds of rate cuts, the interest rates in China's state-owned banks are generally below 3%. The doubled annual interest rate for mainland Chinese not only ensures the safety of their funds but also guarantees asset appreciation, making it a win-win situation. Hence, more and more people from China are drawn to open accounts in Hong Kong. An analysis article on the Quartz website pointed out that apart from China's real estate crisis and multiple trust product collapses, obtaining broader health insurance coverage is another reason for Chinese residents to purchase overseas insurance. A report released in March by consulting firm Oliver Wyman showed that the Chinese government's management of the COVID-19 pandemic was chaotic, fluctuating between stringent lockdowns and sudden relaxations, which led to an increased demand for health and life insurance among citizens. Hence, many mainland Chinese clients coming to Hong Kong to purchase insurance policies and open accounts are choosing future medical coverage. Some netizens argue that the situation isn't so straightforward. With such an influx of funds flowing from China into Hong Kong, won't this impact China's economic environment? If so, would the Chinese government stand by idly and let China's economy suffer? Hong Kong economist La Ke-chung recently stated on the talk show Precious Dialogues that the reason so many mainland Chinese can continuously open accounts in Hong Kong is that the Chinese Communist Party has implicitly given the, quote, green light. From the party's perspective, if mainland Chinese officially open accounts, especially through major state-owned banks, it falls within a controllable range. Hong Kong is also under the Communist Party's jurisdiction, and a certain degree of capital inflow and outflow can still benefit China's economy. La Ke-chung estimates that the Chinese Communist Party may not allow a large amount of capital to funnel into Hong Kong. Many of those opening accounts might not be significant clients. Most are probably individual retail investors with a cumulative amount not being too substantial. If mainland Chinese place a small amount of money in high-interest deposits or buy some Hong Kong financial products, it could invigorate the Hong Kong renminbi market to some extent. The government may have intentionally relaxed banking policies to allow these individual investors to open accounts. However, he emphasized that the ease of opening an account depends on the type of account. Personal accounts are easier to open, while business accounts are expected to undergo much stricter scrutiny. For wealthy individuals who might face rigorous examinations, there are other ways to funnel their money to Hong Kong. Mr. Liang, an expatriate who once worked in investment and financial services in Hong Kong, said that he was aware of some of the situations where mainland Chinese funneled money abroad and had even arranged it for friends and family. Although Chinese policies allow immigrants to transfer their assets at once, they require many intricate proofs, such as proving the money in bank accounts belongs to the individual, and if it was transferred from a friend, one needs to prove whose money it is. For wealthy individuals, proving large transfers can be cumbersome, and the basic quota of $50,000 for foreign exchange is hardly sufficient. Therefore, underground banks become the primary choice for these wealthy individuals to funnel their money. Insiders have revealed that the reason these underground banks, which can bypass the Chinese Communist Party's policies, continue to exist is that they are backed by high-ranking officials within the party, protecting them from government scrutiny and shutdown. You need an introduction to a reliable underground bank, and many of these banks are backed by high-ranking officials. This inside information allows them to adjust the amount and method of fund transfer to evade risk. Although underground banks started with small exchange businesses, their networks have evolved into large-scale underground banking operations. It's more complex than it seems. These banks have an entire system designed to accommodate officials at different levels, as corruption in China happens at provincial, district, city, village, and township levels. Mr. Liang further stated that it might not necessarily be safe for mainland Chinese to funnel their money to Hong Kong, especially given the current state of Hong Kong no longer strictly adhering to the one country, two systems principle. If mainland Chinese have accounts in a third country, they should transfer their money as soon as possible. The funds funneled to Hong Kong through underground banks can be immediately transferred to third countries. Mr. Liang's mainland Chinese friend, Mr. A, liquidated real estate assets amounting to 11 million renminbi before the pandemic. Due to the limited $50,000 foreign exchange quota, the funds were transferred to a previously opened account in Hong Kong via an underground bank and have been successfully transferred to a third country where his children reside. Quote, moreover, while there's a need to transfer the money quickly since funds are usually moved out gradually, it's crucial to maintain a good record in Hong Kong bank accounts by keeping a certain amount of deposit there. Otherwise, immediate transfers might raise suspicions, leading to account closures, Mr. Liang emphasized.